Hello guys, this is Shaik Mama and welcome to Crypto Mama's channel. In today's video, we are going to talk about gold. We'll be taking this particular commodity, we'll be breaking it down in a technical standpoint. We'll be trying to look at areas of opportunities available to us this particular week, where we can be taking our trade during this particular trading week. But before we get started, if you are new here, make sure you subscribe and click the notification bell so that in the future when I upload a video you don't get to miss it. If you also like the content of this video, make sure you smash the like button. So let's get straight to the content of this video. So when you come to gold in the daily time frame, you can obviously see that price has created an overextended W pattern over here. And I told you, anytime you see price create a W or overextended W pattern, you should expect price to trade all the way back to the neckline around this particular area. So, and also during this move to the downside, you could see price was doing what? Price was creating higher highs and higher lows. You could see this was what price was doing. Price was creating higher highs and higher lows until this particular price point, when price melted all the way to this particular area, showing us that okay, price has now changed what? Sentiment structure to the downside. And after price melting to that area, price made a retracement to this particular price point and also melt down. And after price trade to this particular area, price also made a retracement to this particular price point and did what? And broke this particular low once again here. And after breaking that particular low, price has once again also retraced to this particular price point, which we can expect that price might not take out this particular high. If this bearish structure is to continue, then we should expect price at any point around this particular area between this line and this line. At any point, price can stop from there and start pushing to the downside once again. So after knowing that, what we need to do now is go deep into price structure to see what structure is currently doing. And when you zoom out this chart at this particular price point, you could see price took out this liquidity here and melted to the downside. And during the time price took out the liquidity, price did what? Price created this particular M pattern, which after the creation of an M pattern, you expect price to trade back to mitigate the neckline before making another move to the downside if price is in an overall downtrend. And price hasn't what? Traded back to the neckline, which is currently serving as a future reference point for a rejection. And after that also, you can see at this particular price point, price also created additional M again around this particular price point, and price has traded back to that particular neckline to mitigate that particular neckline, which at this price point in the area between this line and this high, we can expect price to reject and continue moving to the downside. So since price has traded back to our M neckline and mitigated that area, which also has a little fair value gap which has been traded to by this green candle, we can expect price to do what? To reject at any area at any point from now. We can expect price to reject to the downside. And how do we determine when price can be rejected to the downside? That is when our lower time frames price action comes in. So this is where we'll go into our intraday time frame, that is our hourly time frame, our 30 minutes time frame, our 4 hourly or 15 minutes time frame, to look at the precise areas price can actually turn and start going to the downside. But right now, at this particular price point, since price has mitigated the neckline, you could equally do what? You could equally short the market from here and have your stop above this high and target this particular neckline here. But that is not smart. That is not a smart way to trade it. The smart way to trade it lies in the lower time frame, which I will not be sharing this particular video because that one is reserved purposely for those I am currently training in my mentorship. So at this particular price point, you could equally short the market around here, because if price is to obey this particular M pattern, price should not what? Trade above this particular high here. That is the logic that you should have at the back of your mind. So this is basically what I wanted to share with you today. This particular week, we are looking for selling positions on gold this particular week. So this is basically what I wanted to share with you in this particular video. And thank you for watching, and I'll see you again in another video.